Good morning from our global headquarters in New York. I'm Manus Trenny alongside Danny Berger. You're welcome to Bloomberg Brief. Let's set that agenda.
The Bank of Japan hikes and plans to have bond purchases. Now we count down to the Fed. A turn in fortune, Microsoft takes a knock, but tech rallies on reports of a shift in chip export policy from the U.S. And Israel kills two enemies in two capitals with attacks in Beirut and Tehran. Hamas confirms Israel has killed its political leader. Manus.
Breaking news, Danny. This is on CPI. This is not what the Eurozone will want to hear. We've got Euro area consumer prices on the headline, 2.6%. The estimate out there was for 2.5%. Of course, Germany speeded it up. It was 2.6%. We know that. France was a little bit lighter. And on the core, 2.9%, Danny. The estimate was at 2.8%. But of course, we know the focus will be on the services CPI number.
Exactly. And to be clear, we are seeing little change in the markets, little change in euro movement, little change in the bunds. As you say, the consumer prices are unchanged and the services rising 4%. I know that's what you were talking about, Manus. It has been that service part of the economy that's been troubling for the ECB to get under control.
And that's exactly what Isabel Schnabel had been focusing on. There's your yields dropping this morning. We've got a veritable feast of markets to get through from the Bank of Japan, counting down to the Fed. This is what you have got in terms of the rest of the markets. You've got pretty violent swings going on in the equity market, from down 1.5% on the Nasdaq, turning it around. Let's have a look. Do we have the board there? Let's have a look at some of the global markets. This is what we've got for you. The Nasdaq turns it around. Look, this is on a couple of different things, Danny. I know you can sort of say, well, Morgan Stanley raised Nvidia to the top pick after a washout on the stock, but they say a lot of the problems have been done. What really is pushing the tech narrative is the foreign chip exports. We understand that the US will step back on its restrictions for Japan, Netherlands and South Korea in terms of chips to China. Microsoft was pretty brutally attacked yesterday in the aftermarket because the cloud business, it grew, but not as much as the market wanted. To the Bank of Japan, there is your dollar yen. Nobody's fading this move. It sounds as if Ueda has gone a little bit more hawkish on the hike of 25 basis points and halved the QT. And indeed, there is no cap. 0.5% is not really a ceiling. And we count down to the Fed. What will they indicate, Danny, in terms of the proclivity to cut?
Yeah, we have the yen portion of the equation. We're still waiting for the dollar portion of the equation from the Fed. I thought it was remarkable that Ueda was hawkish. This is a central bank chief that after every single meeting of his, he's had 10 now, that the yen has weakened. This is the first time, his 11th meeting, that we've seen appreciation from the yen. Again, he is someone who likes to skew dovish. So the fact that he reiterated this idea that there will be subsequent rate hikes is a sea change for Ueda.
And also on the ceiling, he talks about the 0.5% as not really being a ceiling. HSBC say it was a slightly hawkish move on the forward guidance. Real rates are not significantly low levels. They will continue to rise. Well, let's take some of that thesis on the Bank of Japan, raising their rates by 25 basis points. Take that straight to Derek Halpenny. He joins us now on first response to this from MUFG. Derek, good to see you this morning. A hike of 25 basis points, having the QT. And Ueda seems to have pivoted from that uber dove on those 10 meetings that Danny has referenced to somebody who's ready to pull the trigger again. How hawkish was this hike?
Yeah, it was definitely, when you take the whole package, the moves, the changes and the communication, you definitely have to conclude it was hawkish. We were expecting the 15 basis point hike, but only about 30% of the market was, so that was certainly one element of surprise. I think the JGB purchase rate reduction was broadly in line with expectations, and we're going to see a pretty gradual decline to under 3 trillion worth of purchases per month by the first quarter of 2026. So in line there, but I think the key element in terms of the hawkishness was the guidance, and now we have an explicit guidance to hike rates again, and the bar is pretty low for that. You just have to see the incoming data meet the forecasts of the BOJ, and that will be enough for additional rate hikes. So, and the forecast bias risk is to the upside. So pretty much everything was on the hawkish side.
It's almost as if what people are calling for the Fed to do, to focus on the forecast, not necessarily the backward-looking data. But in that, Derek, Ueda said that the consumer was solid. If you look at the data, the consumer seems to be anything but solid. Over the past GDP prints, you have seen declines, basically down for a year nonstop. And even in April, Ueda was talking about this idea that the consumer is soft. What do you make of that reasoning?
Yeah, solid probably is a little bit, how should I put it, unrealistic description maybe, but what I would say is that I wouldn't argue that there's an inconsistency in raising rates in circumstances of weak consumption, because ultimately this is about inflation hitting real incomes. And today was a point in which they had to send a strong signal to the markets that they were tackling the inflation in Japan, and that ultimately that should help to instill confidence in inflation expectations coming down in the future, which ultimately should help to lift real incomes and essentially be a positive for consumption and GDP. And that's actually what's unfolding here in the UK and to a degree in Europe, where inflation has come back down and growth is picking up here in the UK without any easing in the monetary stance. So I think there is justification in the move, even with the consumption backdrop not being particularly favourable, you could argue.
I should actually just correct myself, of course. A 15 basis point hike taking us to 0.25%. Let's talk about the flow. Nobody is fading this yen move. The yen continues to strengthen this morning. Those JGBs are going to become more appealing to the domestic investor, which I think is also a significant arrow in the strengthening of the yen story. But I want to get your take on where the money is. Hedge funds, we know, are still short, but they had the biggest retreat from their yen short bet since 2011. Do you see the next leg as a capitulation? If the Fed intimates that they are ready to pull the trigger, can that invoke a capitulation and break 150?
Yeah, for sure. I think short-term momentum can definitely see dollar yen continuing to decline. I think you have to go into degrees of to answer that question more specifically. Like, everybody's expecting the Fed to cut in September. Assuming tonight that is implicitly at least endorsed by Powell, then I think the short end, the front end of the curve in the US remains at these levels, maybe softens even further. And going back to what Danny said at the beginning, 75% of the move in spreads that favor Japan in July was down to the US and yields falling. 25% was down to Japan and front end yields moving higher. So while we've had this move down in dollar yen, of course, still part of that picture in terms of dollar yen is the Fed and what happens tonight and beyond. A weak labour market report on back of a weak CPI report that we've already had. And, that's enough, I think, for dollar yen to be, well below the 150 level by potentially the end of the week.
Yeah, perhaps no one is hoping for a dovish Fed more than Ueda. Derek, you're going to stick around with us. Derek Halpenny there. First, let's get some other top stories that are trending on the terminal this morning. HSBC shares are rising after the bank reported second quarter pre-tax profit of $8.9 billion. That is a beat on expectations. Noel Quinn signed off his final quarter as CEO by announcing a further return of $3 billion to shareholders.
We're retaining sufficient to drive growth, and we're distributing any excess because we've still got a very strong capital ratio, CET1 ratio. We're quite well above our target range. Therefore, we're able to both grow and distribute via buybacks.
L'Oréal reported sluggish sales growth in the second quarter as the world's biggest maker of beauty products suffered from weakness in China. The company points to weak consumer confidence as the cause of a decline in the mainland China beauty market, with sales in North Asia down for the fourth straight quarter.
Dead heat. A new Bloomberg poll says Kamala Harris has wiped out Donald Trump's lead across 7 battleground states. Harris was backed by 48% of voters versus 47% for Trump, with the VP overtaking the former president in Arizona and Nevada, and more than doubling Biden's lead over Trump in Michigan.
Coming up, tensions rise in the Middle East as Hamas says Israel has killed its political leader after an airstrike in Tehran. We discuss the impact.
And later this hour, we're going to be counting down to the Fed decision with John Ryding of Brean Capital. on your Bloomberg Brief.
If Israel is attacked, we certainly will help defend Israel. You saw us do that in April. You can expect to see us do that again. But we don't want to see any of that happen. We're going to work hard to make sure that we're doing things to help take the temperature down.
That was the U.S. Defense Secretary Lloyd Austin on Israel's attack on Beirut. They killed the Hamas political leader. Joining us now for more on this story is our Middle East anchor, Joanna Bersecci. Joanna, good to see you. Look, what more do we know about what happened, and how significant is the figure in Hamas's political leadership, Haniyeh?
Yes, good morning, guys. So we walked in this morning to a statement put out by Hamas saying that their senior leader, Ismail Haniyeh, had been killed in an airstrike launched by Israel in the early hours of the morning, 2 a.m. local time. He was in Tehran, so this is significant. Ismail Haniyeh happened to be in Iran because yesterday was the inauguration of the new President Pezeshkian. He was there attending the ceremony. There are actually pictures of him hugging President Pezeshkian. And then, of course, this assassination happened overnight. Iranian state media saying that it wasn't just him, but his bodyguard as well, who was killed in the attack. Important to note here that we haven't had any official comments out of Israel yet. However, this will be seen as a big, major coup for the Israeli Prime Minister Benjamin Netanyahu, who has vowed to eliminate Hamas leaders ever since October 7. The other consideration, of course, is that Ismail Haniyeh was the chief negotiator when it comes to those ceasefire discussions. And the fact that he is gone raises a lot of questions about whether those negotiations will continue. In fact, just in the last 10 minutes or so, we have heard from the Qatari PM, Qatar being one of the major mediators in the region, saying how can mediation efforts succeed when one party kills one of the negotiators? So that does seem to suggest that the negotiations will be put on hold for the time being.
One of the other questions lingering, Joanna, is the risk of escalation, considering that this happened in Iran. Are we hearing anything from the country?
Yeah. Yeah, and the timing is really raising a lot of questions here because, as I mentioned, the fact that Ismail Haniyeh was there for the inauguration is symbolic in itself. President Pezeshkian had run on a platform of looking to reopen diplomatic channels again with the West. We know that the Iranian economy is buckling under the weight of sanctions. He was looking to restart some of those conversations again. However, if you listen to some of the language that has come out of Iran this morning, would suggest that that door is probably going to get shut again. We heard from the Supreme Leader, Ali Khamenei, a short while ago. He said, "Severe punishment awaits Israel." That is a quote. The new president himself said, "We will defend our territorial integrity. Iran will make terrorists regret their actions." So fighting words from Iran, and the whole region is on high alert.
Joanna, we really appreciate it. Joanna Bersecci there, anchor of Bloomberg Horizons Middle East and Africa. Let's talk about geopolitical risk. Back with us is Derek Halpenny, head of research at MUFG. Derek, the past few months have been notable, let's be honest, the past few years, of this push and pull of what do these markets care about? The economics, the central banks, the politics, or the geopolitics? On a day like today, should you be seeking safety?
Yeah, like obviously with the BOJ and the Fed and then the Bank of England tomorrow, I think, this story that has evolved over the last 24, 48 hours has taken a little bit of a backseat. And I think certainly if it wasn't for the other events, there'd be a lot more focus on this. To answer your question, I think geopolitics has become nearly part of the status quo. I mean, in terms of the elevated risks related to geopolitics. And in that sense, markets tend to react when, there's a meaningful link between a geopolitical risk event and the macroeconomic backdrop. So, for example, in Ukraine, there was an immediate reaction because of the significant supply concerns in relation to energy and other commodities. I think for this really to broaden out and become a bigger issue for the financial markets, something similar has to happen, and that is obviously energy supply. And there's no meaningful risk of that over the short term, at least. And in that sense, I think the markets are monitoring it. Geopolitical risks are elevated, but ultimately you don't see any big financial market volatility.
No, and I mean, the response mechanism from oil, one can understand this miniature knee-jerk reaction up 2%, 2.5% at the moment on Brent, but nothing gargantuan, because it'll be the reaction function from the Iranians, which was fairly muted. We know that the last time there was a direct conflict between Israel and Iran. Can I ask you about the hallmarks? I mean, Danny talks about is now the moment to seek haven. Yen was being driven by the carry trade rather than geopolitics. The Swiss franc is rising because of real rates. Now, they're two immediate go-to haven currencies. Does the yen get a double punch now with this escalation risk and the risk of more tariffs coming from a potentially a new Trump administration?
Yeah, I think the dynamic in the yen market is changing. And, you know, for example, we look quite closely at the correlation between VIX and dollar yen. And through a lot of the period through the inflation shock, that correlation broke down. But now what we've seen for, it's only a short period, 8 consecutive days, we've seen the negative correlation return between, VIX going up and dollar yen going down. So we're starting to see the emergence of that risk haven characteristic. And there's a real reason for this. It's front-end yields in the US are falling. And that's a change in the dynamic of risk that we've been used to over the last couple of years, which we've had these risk-off periods, but rates in the US have stayed higher. So if rates continue to fall in the US, the yen is going to start getting a safe haven bid. And events like we've had will certainly reinforce the momentum to the strong side for the yen.
Derek, thank you very much. That's interesting. In 8 days, you've seen this turnaround and the correlation. Derek, thank you very much for being with us. First response on the BOJ. Derek Halpenny of MUFG. Coming up in the show, we get right into the tech numbers that we had overnight and the latest, the latest moves from the reports on NVIDIA. Context matters. This is Bloomberg. It is Bloomberg Brief. I'm Manus Granny alongside Danny Berger. ASML is among one of a group of stocks that is surging today. We have a report from Reuters that the US planned to exempt chip equipment vendors from the Netherlands, Japan, and South Korea from the export restrictions. A big political shift if it comes to pass. Tom McKenzie is with us. Tom, what do we know about the potential curbs perhaps being less onerous than we had thought? ASML is on fire.
It is. What a move in ASML. And you saw similar moves in companies like Tokyo Electron in the Asian trading session as well, because they look like they may be exempt from these restrictions, at least for now. And according to this reporting from Reuters, look, we've seen this barrage of restrictions, of course, on companies that supply the highest end kit in terms of chip making into the Chinese market over the last few years. This was going to be the latest and arguably most aggressive, one of the most aggressive chapters in that attempt by the Biden administration, by the US, to restrict China's access using this foreign direct product rule. But the reporting from Reuters suggests there is a carve-out, at least for now, for the Netherlands, Japan and South Korea. Now, analysts at JP Morgan says this could be because they want to set up a negotiation with those individual countries around the companies that supply the Chinese market. But there's a breather right now. Investors breathing a sigh of relief. Don't make the mistake, though, that these companies are going to get free access to the Chinese market. They are not anytime soon. That whole theme continues. It's just the nature of these restrictions. And by the way, ASML doesn't supply its most high-end lithography machines into the Chinese market right now, precisely because of previous restrictions. But we wait to see the details on this. Taiwan, Malaysia, not excluded, so they're still part of these restrictions. But certainly you're getting a lift to those companies listed in Japan, South Korea, and the Netherlands as a result of this. But there's more detail that's needed.
Well, like so many places in this market at the moment, Tom, it is a question of what do you pay more attention to, the fundamentals or the politics? And yesterday it was the fundamentals. You had Microsoft earnings where they showed a 80% rise in their capex in the first quarter and said that demand for AI is outstripping capacity, maybe leading to some of the softness and the market disappointment. Is that the theme taken together with what we heard from Alphabet, that is just going to take longer for AI to deliver?
I think maybe there's the downstream to upstream to downstream analogy going on within the semiconductor space. The chips, the picks and the shovels, I should say, so the chip makers are still doing well. You saw that from AMD raising their forecasts for the number of AI accelerators that they plan to sell this year from 4 billion to 4.5 billion. We know that was consequential for analysts, investors watching that stock. Then you have, of course, the story around Microsoft and the spend exactly on that kind of hardware. As you say, going from 14 billion in the last quarter to 19 billion, if you include the leases for things like servers and data centers. The focus on the monetization piece for the likes of Microsoft and later today Meta, that scrutiny is still there. The CapEx spend is still there. Look, if you're looking for a silver lining for Microsoft, the AI piece of the cloud demand did increase this quarter. The cloud growth was a little softer than the previous quarter, but within that growth, the AI part actually increased. That suggests the momentum is still there.
Okay, Tom, thank you very much. That is Tom McKenzie, anchor of Bloomberg Daybreak Europe. Still this morning, Microsoft is weaker, down by 2.7%, but overall it is a big tech rally because of the chip policy. Okay, coming up, we count down to the Fed decision with John Ryding of Brean Capital. From our global headquarters in New York, I'm Danny Berger alongside Manus Cranny. Let's set your agenda.
The Bank of Japan hikes and plans to halve its bond purchases. Next, we count down to the Fed. A turn in fortune, Microsoft takes a knock, but tech rallies on reports of a shift in the chip export policy from the US. And Israel kills 2 enemies in 2 capitals with attacks in Beirut and Tehran. Hamas confirms Israel has killed its political leader. Danny, good morning. These tech markets are on fire, and a nice pivot from the BOJ.
It's hard to know where to start with this, Manus, because there is so much going on this morning. It is a relentless news flow that's impacting these markets, the push and pull between politics, geopolitics, and the fundamentals. I've been talking about that all morning. For now, it is the geopolitics that is dominating the tech trade. S&P futures up nearly 1%. It is the NASDAQ that is up more than 1%, 1.4% this morning, with a report from Reuters, as you mentioned, Manus, that the U.S. will be removing some of those strictest of curbs when it comes to South Korea, Japan, and Amsterdam. Remember, a lot of the tech sell-off, it also coincided with the stricter curbs on chip makers. That was one of the fuels of the legs of the sell-off. So it makes sense that some of that turns around. Microsoft, though, some disappointment overnight. That, again, is being overshadowed, though Microsoft shares are off pre-market. Then we get to the Bank of Japan. We have a hike, and we have a plan to have bond purchases by 2026. Assuming everything goes to plan, UEDA says that they will continue to hike. That's enough to see the yen continue to strengthen by 1.3% versus the dollar. Meanwhile, NYMEX crude, Manus, this has to do with the geopolitics, as you mentioned, with an Israeli strike. Both Hamas and Hezbollah, NYMEX crude up 2.6%.
Yeah, I mean, that's a fairly decent move in that. On the Bank of Japan, Danny, as we've just been talking to Derek Halpenny, as he said, look, the next, shoe to drop here is the Fed. We'll get a little bit more indication on whether they are ready to really cut in September. I think the cap, where UEDA says 0.5%, is not really a ceiling for him. It's a question of how quickly does he actually want to get there, because that is a distinct shift. I think, 10 dovish tilts in a row after each meeting. So it's a shift. And how quickly do they really want to get to 0.5%?
Yeah, again, this is the first meeting UEDA has had, his 11th meeting, but his first one where the yen has strengthened afterwards. I think a lot of people expected him to be dovish. And that's why you see some of the sustained gains in the yen that we're seeing this morning. Because it's not only the ceiling, man, it's him saying, we're going to continue to hike, assuming everything goes to our forecast. And
I think I just caught up with Jane Foley on the IB, and she's talking about real wage growth. And if real wage growth accelerates more, that gives them the ammunition to get on with it. You talked about geopolitics and politics, and geopolitics is front and center overnight. We've got tensions rising in the Middle East, with Israel killing 2 enemies in 2 capitals in the span of 7 hours. The U.S. Defense Secretary Lloyd Austin spoke after Israel's attack on Beirut.
If Israel is attacked, we certainly will help defend Israel. You saw us do that in April. You can expect to see us do that again. But we don't want to see any of that happen. We're going to work hard to make sure that we're doing things to help take the temperature down.
Joining us now from Dubai is Jumana Basechi. Jumana, look, we know what happened. We know the choreography of what happened. This now comes down to the response mechanism. This incident took place in Tehran. This is the political leader who was involved in negotiating the peace settlement. How do we think Iran will respond? An escalation or stand pat for now?
Well, a lot of that resides on the shoulders of the new president, the Iranian president Pezeshkian. And the reason Ismail Haniyeh was there in the first place was because yesterday was the inauguration ceremony. Already we've had a couple of comments come through from the Iranian president saying, we will defend our territorial integrity. Iran will make, this is a quote, terrorists regret their action. It is unsettling for them that the assassination took place on their soil. And then a short while ago, we heard from the Ayatollah, the supreme leader himself, saying severe punishment awaits Israel. So in all likelihood, there will be a response forthcoming out of Iran. Also worth mentioning, guys, that Ismail Haniyeh was the chief negotiator on these Gaza ceasefire discussions that have been taking place. The fact that he has been eliminated means that there's very little hope that a diplomatic agreement can be come to. And indeed, we heard from the Qatari PM a short while ago saying, how can mediation succeed when one side has been assassinated?
And this morning, Jumana, you are seeing a decisive move in oil, 2.6% for WTI. But we've seen this in the past when there have been flecks of potential escalation that the market reacts as a gut punch and quickly undoes this. So how do we think about a potential lasting impact on oil?
It's interesting because so far the oil market has been pretty adept at shrugging off all of these geopolitical concerns. Remember, right after October 7, we got to around $90 in Brent, then we scaled back down again. Shortly after April, the tit-for-tat events, retaliation between Iran and Israel, we also spiked up to $90. We've been steadily declining in the run-up to the last couple of days. This morning, you can see we're up more than 2% on the news as investors start to price in further geopolitical premium. But one thing that I would just say is Iranian oil supply is actually at the highest level it's been in the last 6 years. They have been pumping more than ever, circumventing the sanctions that are in place. They're finding a big buyer in the hands of China. And so the question really is how the U.S. would choose to respond and whether they would look to impose further sanctions on Iran should Iran look for retaliation to the events in the last couple of days. So a lot of moving parts here, but everyone in the region is on edge.
Jumana, really appreciate your reporting on this. Bloomberg's Jumana Basechi. Now, as Manus and I were talking about at the top of the show, there's a lot to get through today. Geopolitics, tech earnings, and BOJ, and maybe you forgot that there's a Fed decision at 2 p.m. You'd be forgiven if you did. Brean Capital's John Ryding looking ahead, writing this: Powell has to signal that this is not the start of an easing cycle because the economy is weakening, but a recalibration of real Fed funds rate. However, if Powell fails to convey this message successfully, markets could price in more rate cuts than the Fed expects to deliver. John joins us now. He's the chief economic advisor at Brean Capital. It's fair to say that Powell has had some varying success in his messaging when it comes to things like that. So what's your confidence that he can thread the needle?
We all remember December, and when he said it was natural when the Fed funds rate was near its peak to think about interest rate cuts, and that triggered a big rally in the fixed income markets. The market moved to price in almost 7 cuts in 2024. Now, it's difficult because he's not an economist. He does a good job staying on script, but he can be potentially a little loose with words. So, but he's been much better since that December meeting in conveying his message, and he's not the only one who's going to be out there conveying it. A lot's going to be on the shoulders, I think, of people like Governor Waller later on, New York Fed President John Williams, and others, if he gets the messaging wrong. But right now, I think the markets are priced to where the Fed wants to be, which is bringing the Fed funds rate down a little bit this year. There's 2.5 cuts priced in for this year. I think the Fed's going to deliver. It's been a long-standing view of ours. They're going to deliver in September with a quarter-point cut. They're going to deliver in December with a quarter-point cut. And the reason being, as inflation continues to decline, as the comment, the quote you read out a couple of minutes ago, real interest rates, inflation-adjusted interest rates rise. So policy's getting tighter. And policy's getting tighter as inflation approaches the 2% target. And, you know, the Fed's used this airplane analogy in terms of hikes. Well, it also applies when you're trying to land a plane at 2%. You don't, you know, power up and you know, have a steeper angle of descent when you're coming in to try and land on the runway.
What sympathy do you have with, you know, loose lips sink ships? So it is going to be down to the Fed speak later on in terms of understanding really the trajectory of whether it's a tweak or something more substantial. But Alan Blinder talking about tight real rates. Dudley, we've looked at this op-ed from the former New York lead, and he is saying the situation has changed. So the question then becomes whether, and our guest yesterday said, we're deep in policy error. Would you agree with that? We are in effective policy error and they need to be more aggressive, earlier and more.
It's difficult for them because the big policy error that they committed was to continue to ease by buying $120 billion worth of bonds per month in 2021 as inflation was taking off, and dismissing the rise in inflation as being transitory. So I have some sympathy with the view that there is a good case for the Fed to lower interest rates at the meeting today. But if they did, not having prepared the markets and having made the mistake on the other side, they might be seen as jumping the gun. And so they have to be conservative. They have to be slow. And the economy is strong. GDP growth in the first half of this year was 2.1%. Yes, the unemployment rates crept up, and that's something to keep an eye on. And I think the key thing here, Manus, is once we get the signal, which I think we will get today, the Fed is ready if the next two inflation reports between now and the September meeting play ball, the Fed's ready to cut and get the message out that it's a recalibration, it's not a sequence of cuts. But if the economy does weaken, that's when you would transition from a sequence of cuts, from a recalibration policy to a sequence of cuts. So now what happens is all the reports, like Friday's jobs report and so on, will be under extra scrutiny for the markets to figure out, you know, what kind of interest rate path are we going into? And it doesn't have the luxury today of having a new set of forecasts to present and say, this is what we think. It's going to fall on Powell in Q1.
Well, this is part of the reason that both Jan Hatzius of Goldman and Mohamed El-Erian have made this argument that they should be hiking now, because they might be too data point dependent, and the data is indicating that inflation is slowing, there's some pockets of weakness, and they could get spooked by one print in the next 2 months that makes them hold back from cutting. Is that a fair concern?
It is a possibility that we could have a poor inflation report. But the interesting thing is we had the poor inflation reports in the first quarter of this year. And we looked at that and said, this is a repeat of a pattern that we've seen, where at the beginning of the year, inflation picks up as companies push prices through, and the seasonal adjustments don't take care of it. So we had some really bad-looking quarterly numbers, looking quarter on quarter. But that's happened last year as well. And so the year-on-year inflation rates drifted down. Now, in the second half of the year, the chances are that as that seasonal adjustment factor unwinds, that in the second half of the year, the inflation reports, as they were last year, could be quite benign. So I don't think they will be derailed, and they shouldn't be derailed by a single data point. The main thing is the Fed has said we can afford to be patient because the economy is in decent shape. The labor market's in decent shape. We saw a rise in job vacancies yesterday were relative to where it was previously reported. And so this adjustment is taking place, and the Fed can be patient and move slowly. And if they were to be derailed by a couple of bad inflation prints, then perhaps they shouldn't be cutting rates. But I don't think that's going to happen.
Well, they've certainly got another couple of things in their favor. The slowdown in China, the drop in energy prices, commodity prices have undone all of their gains for this year. I know there's a bump in oil this morning, but you know the elements are there. John, let's see what the Fed does, whether they give a helping hand to Ueda over at the Bank of Japan. Another leg up for the yen. Go on. John Ryding there of Brean Capital, our guest ahead of the Fed. Coming up, we'll dig into the chips story this morning. You can see we're bid this morning on ASML and the semiconductor industry. We'll talk about those exemptions that we expect from the US for their allies. Good morning. Context matters.
It's your Bloomberg Brief. Danny Berger and Manus Cranny in New York City. So ASML is among a group of stocks, Manus, that is surging today. There's a report from Reuters that the U.S. is planning to exempt chip equipment vendors from Netherlands, Japan, and South Korea from upcoming export restrictions. Let's bring in Bloomberg's Mandeep Singh on this. Mandeep, I looked at this and I thought, okay, Japan, South Korea, Amsterdam, that's where all most of these chips are being made. So what do we make of the U.S. lifting those restrictions on those countries?
I mean, when you look at ASML, the machines that they are making requires a lot of parts that are coming from these countries. So if you put export restrictions on all the countries, that's not helping ASML's business. And I think because these countries are allies of the U.S., the government has decided they know who they are doing business with, and they are letting off some of the restrictions, which I think is a big positive for ASML, because there clearly is more demand for their equipment than they can ship right now.
Do you think that they can bank on it as a long-term political narrative from the United States? You are our allies. We will allow you to send these chips into China. If there's a shift in the White House, and we know that tariffs are one of the big levers that not just tariffs, but also restrictions and trade are going to be an alpha for a Trump administration. So how long-term could this policy be?
Well, obviously things could change come January, depending on who we have in the administration. But I think right now, I wouldn't call this as shipping to, Chinese companies. There could still be restrictions in terms of who they ship to.
Sure.
But the fact that more countries are allowed to ship, the equipment and the parts, it's just a positive in terms of making sure they can fulfill the demand they have for the equipment.
Mandeep, it's kind of like a feast, as Manus likes to put it, of stories to choose from this morning. There's a lot with tech. I mean, there's a lot in general today, but there's a lot with tech. We have to go through Microsoft earnings yesterday because it is falling pre-market, I think some 3% this morning. And you get this idea that they have more demand for their AI features than there is capacity. Is that where the tension lies for this stock?
Well, and also they called out some weakness in the EU region in terms of the traditional cloud consumption. So the Gen AI piece was robust, 8 percentage point of contribution. It's the non-AI piece, especially in the EU. That's where they called out the weakness. And you have to ask yourself, why are companies not spending on the CPU stuff? And that's where I didn't think they came out very clean in terms of the answers they gave. But the AI part is robust. The Office 365 Copilot, the GitHub Copilot, these are the AI products, and they did very well.
Okay, well, I mean, we're seeing a nice shift this morning. NVIDIA is up over 5%, and AMD also shifting higher. So there's a good turnaround in the tech story. What has Mark Zuckerberg got to ask for? He asked for patience the last time round. What do you think his narrative is going to be today?
Well, so they are going to raise capex. And I think what the street wants to know is how much of that capex is going towards AI versus how much is going towards reality labs. Street doesn't like the reality lab spending that much, although I would give them credit for the AR glasses. They seem to be having some momentum behind them, but clearly the street will be more excited with the AI piece than they would be with the reality.
Danny and I are grounded in reality every day. We don't live in some fantasy world.
I'm imagining you doing the show with the VR headset. Yeah.
Well, we could. This is our reality. 5:49 a.m. Mandeep Singh on the tech stories, a smorgasbord of news. Over in Washington, the Vice President Kamala Harris wipes out Republican nominee Trump's swing state lead in the latest Bloomberg Morning Consult poll. Let's take a listen to her speech in Atlanta yesterday. She ramps up her campaign efforts to grab the nomination as the presidential candidate.
The momentum in this race is shifting. And there are signs that Donald Trump is feeling it. Well, Donald, I do hope you'll reconsider to meet me on the debate stage. If you've got something to say,
Kevin Whitelaw is with us. Fight and talk there from the Vice President. Kevin, good to see you this morning. But this poll, I mean, it really, it sort of pits Harris and Trump almost head-to-head, and a big move in the swing states.
That's right. The swing states really shifted towards at least towards Harris, and now it's really a statistical tie in basically all the key swing states. So that's an important sign, obviously, to show the race has changed and sort of reopens the ability for the Democrats to compete in a couple of states that had started to look out of reach, including Arizona and Nevada. To me, the most interesting element of that poll is the numbers of people, and particularly blacks and women and young Americans, saying that they're now more likely to vote with Harris in the race. It's quite significant. A lot of people saying they're much more likely to vote. And we all know from watching these races before that turnout is an enormous part of this. And this is something where the Democrats had been very worried that Biden was really dragging them down just on that enthusiasm, that idea of getting people out to vote. So seeing the likelihood of voting going up is going to be something that really buoys Democrats as they try to avoid a wipeout in November.
And you see this shift really in the kind of momentum that Harris is bringing, not in what Biden was necessarily targeting before the Biden campaign of places like Pennsylvania. It's now these Sun Belt states, places like Arizona. Does that change potentially who Harris could pick as her vice president?
Yeah, I mean, I think she still obviously wants to win those states up in the Midwest. So Pennsylvania, Wisconsin, Michigan are still, sort of the easiest path. But now she gets to compete in 2 or 3 other places as well. So I think she still probably is most likely, if thinking about the electoral side or sort of the electoral map, get a swing state governor. Those northern states are still the ones that sort of make the most sense for her. But obviously, but now these other states are back in play in a way they were out of reach before. And that means that Trump is going to have to compete harder in those states. So instead of, looking at Virginia and other states to expand his map, he now has to try to basically fight a rearguard action to keep the states that he had thought would be an easier path for him.
Never a dull moment. Kevin, appreciate it. Kevin Whitelaw there. Yep. This is Bloomberg. You're watching Bloomberg Brief. Danny Berger and Manus Cranny in New York. Let's get you set up for your trading day on this Wednesday. Earnings come from Boeing, Kraft Heinz, and Marriott all before the bell. Then Meta and Qualcomm after the market closed. Plus some data, ADP jobs, and at 8:15 Eastern and Chicago PMI at 9:45. And then all that leads up to the main event. It is the Fed's rate decision at 2 p.m., followed by Chair Powell's news conference. So that will give us the dollar side of the yen-dollar equation, Manus.
Absolutely. It's the third leg on the stool. And if you think about it, we had a 10-big-figure rally in yen. Today, we've just had another 2.35 rally. And this is a very clear message from Ueda. He shifted from that dovish position that he's had to 0.5% is not necessarily a ceiling. This is a governor who's laying the table for more hikes to come. It's about the calibration of those hikes.
More hikes to come, assuming that the forecast or that the data meets his forecast. But he talked about consumer strength. But previously, he had been worried about weakness. He'd been worried about the impact of tighter rates, but this time around says that it is just a tweak and it will not tighten things unduly. Okay, that's it for Brief. Surveillance up ahead.